U.S. inflation data came in softer this morning, raising expectations that the Federal Reserve could move aggressively with rate cuts as early as next week, with some analysts even calling a 50 basis point cut possible. Softer CPI data sparks market rally. The latest Consumer Price Index, CPI, report released this morning showed inflation cooling more than economists anticipated. Headline CPI rose just 0.1% month-over-month, while core CPI, which strips out volatile food and energy costs, was flat. On an annualized basis, headline inflation eased to 2.4%, its slowest pace since early 2021. Markets were quick to react. Equity futures jumped sharply after the report, with the Dow Jones Industrial Average pointing to a 400-point gain at the open, while Treasury yields fell across the curve. The US dollar, which had been firming in recent weeks, weakened as traders increasingly priced in significant policy easing by the Fed. This is the softest inflation print we've seen in years, and it effectively clears the runway for rate cuts, said Andrew Lawson, senior economist at Horizon Partners. The only question now is whether the Fed goes with 25 basis points or delivers a more forceful 50. Fed meeting now in spotlight. The Federal Reserve is scheduled to announce its next policy decision next Wednesday. Prior to today's CPI release, markets were nearly evenly split on whether Chair Jerome Powell and his colleagues would move forward with a modest 25 basis point reduction or hold steady due to lingering inflation uncertainty. That calculus shifted dramatically after this morning's numbers. Futures markets now show a near 90% chance of a rate cut, with nearly half of traders betting on a larger 50 basis point move. Economists note that Powell has signaled caution in recent weeks, but he has also emphasized that the Fed is prepared to act decisively if inflation continues to trend lower. The Fed doesn't want to fall behind the curve, said Julia Chen, chief economist at Brookfield Analytics. With inflation slowing and growth concerns picking up, a bold rate cut may be the optimal way to restore confidence in the economy. Growth concerns mount. The softer inflation data comes amid growing evidence of a cooling labor market and a slowdown in consumer demand. Job openings have fallen to their lowest level since 2020, retail sales are stagnating, and business investment surveys continue to weaken. While lower inflation is a welcome relief for households squeezed by rising costs in recent years, there are growing concerns that disinflation is happening too quickly, signaling underlying economic weakness. If this trend snowballs, the Fed will have to do more than just a standard cut, warned Chen. We could be at the start of a more aggressive easing cycle. Market bets escalate. Wall Street is now bracing for volatility heading into next week's Fed meeting. A 25 basis point cut is still considered the baseline, but the probability of a half-point move is at its highest since the Fed began tightening in early 2022. Bond traders see Treasury yields falling further in the short term, while equity investors anticipate a relief rally. However, analysts caution that if the Fed opts for just 25 basis points and Powell communicates a cautious outlook, markets could pull back sharply. For now, optimism is driving sentiment. This is the green light investors were waiting for, said Lawson. The Fed now has room to pivot, and the market is ready to run with it.